Okay, as we enter a whole new week in trade, let's take a look at how the global handover panned out over the weekend. Now, US futures stocks were pretty flat last night. Markets are trying to bounce back from the longest week-long losing streak that we've seen for the US markets in about a year. The Dow futures traded 17 points lower or 0.1%. S&P futures hovered just below the flat line, and the Nasdaq 100 futures were the only green shoot bucking the trend, up 0.2% post the recent correction that we've seen across the Nasdaq as well. Now, Asian markets, not too many cues because the biggest player, Japan, is out of commission. They're on a holiday today. Other cues that we can look out for as far as Asia is concerned is China's 1-year and 5-year loan prime rate, which are set to be out at 9:30 a.m. Hong Kong time, so that should be out currently or any moment now. South Korea's Kospi, meanwhile, is dipping nearly 0.2% in early trade. Australian ASX 200 is also dipping nearly 0.2% in early trade, and overall the MSCI today is 0.12% lower. Now, European markets on Friday closed 0.5% lower. They were also digesting the move seen in the US markets. Most of your sectors and major bosses here ended the day in negative territory. In terms of what was particularly losing a lot in Europe, travel and leisure stocks dropped more than 3-4% as the outlook has been fairly grim with the resurgence of cases. However, healthcare stocks at the same time bucking the trend. Again, a green shoot for Europe, up 0.5%. So that was how they closed out on Friday, and it'll be interesting to see how both these key markets, the US and Europe, either rebound or continue their sideways movement for this week. Something we're not used to seeing because we've just been seeing a prolific rally across the indices over the last 3 months. Now, finally, 2 commodity checks that we always do for you. Let's look at gold. Gold prices actually rose on Friday for their second straight weekly gain. So that's important because it's now starting to build some momentum and it's not just a knee-jerk reaction or move. Now, this is obviously on the back of also weakening in the dollar, which we've also been seeing of late. So the more the dollar weakens, the higher gold prices seem to be going. Spot gold was up 0.6% to $1,953 per ounce and finished the week 0.6% up. US gold futures were up 0.6% again and closed the week at $1,962 per ounce. Oil prices, another green shoot, up 10% last week. Now, there's an OPEC meeting where there was a decline seen in US inventories, and also the OPEC has decided to take sharper action against nations that aren't complying with the production cut. So that's improved the outlook for oil a little bit, despite the fact that demand is still lagging. Friday saw Brent fall 55 cents to $42.75 per barrel, but let's remember that was still after a 7.5% gain for the whole week. WTI 14 cents or 0.3% higher on Friday, $41.11 per barrel. So at least we're firmly above that $40 critical support, which we've mentioned so many times for Brent and WTI. And both these commodities have done well last week, so it'll be interesting to see how gold and oil also perform this week, if they perhaps retrace a little bit or if they continue their advance.